Welcome back to another episode of the Block Runner Podcast. I'm your host, William, always here with your co-host, Iman.
What's going on, dude?
On the sticks, we got TJ.
Hello.
And finally joining us again, we got Jack Liu, one of the contributors of BAMK. Thank you for joining us, dude.
Hey, good to be back on with you guys.
Yeah, man. So about a year ago, we were chatting. We happened to be chatting about Bitmap.
Yeah.
And finally, kind of like one of the most interesting developments that we've seen in Bitcoin has been a stable coin, nUSD, with a relationship with BAMK.
Yeah. Well, really, it's because, we've covered runes leading up to the deployment of the protocol. And, we had our back and forth, I guess, sentiment around it. It's like, runes are interesting. Let's we witnessed like so many different fungible token protocols kind of come and go, and some stayed and whatnot. So we were wondering if anything of interest would actually emerge from this new protocol, specifically, or maybe DeFi, GameFi, whatever. Is there going to be anything robust and like unlocking new market verticals and such? So yeah, first month or so didn't seem like that was going to happen, but you're going to, BAMK was out there, right? But I guess it's through the market forces, right? That invisible hand has now pushed you guys in the top 10.
That's right.
Which is how we organically stumbled onto it, right? It's like, hold on, this one is like not like the rest.
Did you know that we're more than just a YouTube channel? We also built mScribe, the first inscription platform built from the ground up for the metaverse on Bitcoin. Connect your Bitmap ordinals and use our tools to bring your community into the virtual realm. Support us by joining the movement at mscribe.io. Like, comment, and subscribe for the latest alpha. Back to the video.
You do a little bit of research, and there, it introduced us to Athena. Yeah. We really didn't know this was happening. We knew stablecoins are a big deal on Ethereum, right, and abroad.
Yeah.
And then it got us thinking about, of course this needs to exist on Bitcoin. So you're doing well. It's probably like, a month since Rune's deployed. You guys are top 5 now. So just kind of like walk us through like what it is and what you guys have coming up, and like, how is this actually going to... Can it actually get like the whole Bitcoin DeFi thing actually going in any like sensible direction?
Yeah, so this is currently the only synthetic dollar or even stable coin like asset on the Bitcoin blockchain. Tether used to be around on the Omni protocol back in the day until they removed it. And so the confusion might be that historically people have traded BTC against USDT or USDC, but that's always been on centralized exchange venues. In the DeFi onchain world, even in the past year of ordinals, there hasn't been any kind of asset that was kind of moving the opposite of Bitcoin or the other risk assets on chain. So this has been a topic that everyone's been looking for. I think more broadly, the nUSD, which stands for the Nakamoto dollar, it's part of like I would call it a third generation of this type of dollar type asset on the blockchain. The first generation being the most popular stable coins like USDT, USDC. Those are actually backed by dollars in the bank account on behalf of the token holders. The second generation, which gets a lot of bad rap because of its failure so far, is that the algorithmic stable coins. Those are most famously, I guess, Terra Luna, where it's kind of backed by math and is not backed by sort of anything real in the bank account. And this third generation, which first was started by Athena on Ethereum, is synthetic dollars. And that's basically the underlying behind the token, the nUSD token, is positions on on-chain and centralized exchange perpetual swaps, where there's like a long Bitcoin position, short Bitcoin futures position in a one-to-one delta neutral setting. And then basically because most traders tend to go long on derivatives most of the time, there is like a net interest that is gained by the short position. And that can be passed through in some ways towards the nUSD holders. So that's kind of the functions of how the nUSD stablecoin or synthetic dollar works. And then the BAMK aspect of it is like a protocol meme token. So at a most basic level, if you want to think about it, it's like, how you had to have RSIC miners to get the Rune coin?
Yeah.
This is almost like you have to have nUSD, the synthetic dollar, to get basically pro rata distribution of this BAMK meme coin, if you want to call it. So people are speculating that there's going to be a more tighter relationship between the NUSD kind of interest yield and the BAMK. People can wait for that. But BAMK was started with like a free mint for a portion of the supply, 6.25%. So for that initial inscribe out phase, which took about 6 days at the end of April, early May, you didn't even need to have nUSD to kind of lay claim to that first portion. And now we've matched that 6.25% with another 6.25% that will be distributed in 40,000 blocks or so to the holders pro rata of nUSD per block, essentially.
So Jack, let me see if I can outline this for the audience here, just so that we understand the differences between what we have with Nakamoto USD and then something like USDT and USDC, right? So to create USDT and USDC, you need to back that that digital currency with fiat money. So that means that USDC and USDT, they have to have relationships with banks, right?
Yes.
And so with nUSD, you don't need a relationship with a bank. You just need to have essentially a USDe account, right? Athena USD, where people deposit USDe into this account, thereby minting nUSD. Is that correct?
Yeah, so that will be the direct mint. We'll probably be releasing that, around the time this episode is going to launch, which will be big news. So it'll have direct minting and redemption, more critically redemption abilities, where users give USDe, and then for every USDe they put in, they get one nUSD minted out. But currently, the way that the first 1.5 million TBR has been created is that the users are just buying essentially secondary nUSDs on the popular Bitcoin ordinals marketplaces like Unisat, Magic Eden, OKX. And then there's like kind of some fund cycling going on that will take those BTCs, convert it to USDEs, and then park it as collateral to then mint more nUSD. That's been going on so far in phase 1. But direct minting, like you just described, will be launching very soon.
Yeah. Okay. So let's talk about, I don't want to get too deep into the mechanics of like USDE and all that stuff, because like you were saying, there's different levels to this, right? You either back it with stable currency, you either come up with some algorithm that stabilizes the stable coin, or you do a collateralized debt position, kind of like a MakerDAO. And so this is a version of that with Athena, right? There's some version where there's like perpetual futures and then also staking ETH, right, with USDE. But I want to more talk about like the implications of a stablecoin on Bitcoin. So give us your thought as like to the motivation of this. Why do it on Bitcoin? Why this is important for the ecosystem? Yeah, just give us your thoughts on that.
Yeah, everything that's like, I think, big is always going to become more and more abstract and more at first glance. Like, I don't really see the necessity of this. And I had that firsthand experience 2 times when first Tether approached me when I was still at OKCoin back in about 2015 about the idea of creating Tether. And at the time, OKCoin is one of the largest exchanges in the world, similar to how USDC was rolled out with Coinbase. There was a plan to kind of get exchanges interested in Tether. It turns out to be about 2 years early. So at the time, it was like, well, everyone has banking. No one needs USDT. All the major exchanges like Bitstamp, Kraken, Coinbase, they have banking. It was only the very, very small exchanges like a Cryptsy or Poloniex that didn't have it. At the time, there was no concept of DeFi. But as time went on, you realize that even if you have banking, you need interconnectivity between the entire sort of centralized ecosystem. That's when Tether sort of took off. Then by happenstance, I was running the Circle Asia trading desk around the time when USDC was launched. And at that time, once again, it's like, well, the world's already got Tether. Seems like it's late. Why is there a need for USDC? And we got that listed on kind of centralized exchanges, but it wasn't growing that much. It went from about 0 TVL to about 250 million around about six month mark. as you know, like Ethena now is at 3 billion within 6 months. So Ethena is definitely the fastest growing stablecoin, faster than USDC, which is faster than Tether. But what really caused USDC to take off and get to this current 30 billion mark, and with a high watermark of 50 billion, is that actually a year and a half after USDC, there became this on-chain like ETH ecosystem. And that ecosystem didn't already have a stable coin of choice. Like centralized exchanges, once they chose Tether, it's very hard to replace them with USDC. It doesn't matter that you're more regulated, more backed, whatever it is. Like it's very hard to supplant the king. Just like blockchains that come out now that's faster than Bitcoin, whatever, it's hard to supplant Bitcoin. But it found its own use case within the Ethereum DeFi ecosystem, where it's like the stablecoin of choice in like Frax lending, Aave, Uniswap, etc. And that's when the market share really grew. And so even though Tether is still much bigger than USDC, much of that is because CeFi is still bigger than DeFi. So USD has a great chance to continue growing within the Ethereum DeFi ecosystem. And so when I look at that, it's like, okay, well, even though there is now a synthetic dollar called USDe, and they're doing a great job also within the ecosystem where they're providing kind of this kind of synthetic yield from the perpetual swaps, and they're growing. And many people, when I first pitched the idea, was like, well, why does Bitcoin need this, right? Well, Bitcoin DeFi cannot work. Just like everyone says, like Bitcoin is not to be used for ordinals last year as well. Yeah. But if you look at sort of the user behavior, and I know this from operating order swap last year, is that once people take their Bitcoins out of cold storage and they try to inscribe an ordinal, etc., they start becoming sort of tied to their on-chain account, whether that's Xverse or Unisat or Magic Eden Wallet, etc. And it is their preference in a kind of risk-off state to want to be able to access a synthetic dollar like nUSD without having to take their BTCs out of these platforms, these on-chain platforms, and head over to like a centralized exchange again. Because then if you want to come back and inscribe the next thing, you are 2 or 3 steps more removed from getting back into Bitcoin. So I think the timing is interesting because you see a lot of people building layer 2s that are able to bridge the Bitcoin layer 1 assets, including nUSD, over to those platforms. And just in the early first few weeks of this nUSD existing, you can already kind of borrow against BAMK tokens. You can on Liquidium. Your nUSD is trading around on a lot of these DeFi platforms, and some of these new exchanges on chain like Saturn BTC, they already allow nUSD against BTC in a pair as well. So I think it's a DeFi first approach with Bitcoin, and I think Bitcoin is, if you think about it, like maybe the largest exchange in the world. Because if you look at some of these like proof of reserve from major exchanges like OKX, like Binance, they've got less than 5% of the total supply of Bitcoin on their platforms. So where's the other 95%? Well, they're kind of on chain and they're inactive. And if you can bring the stablecoin on chain to Bitcoin, is similar to that first wave of bringing the dollar from their bank accounts onto centralized exchanges. It's like the next abstraction further.
Yeah, can you quickly just go back to the emission of BAMK? Because I'm trying to understand a little bit how it works, because one of the biggest hindrances of why DeFi on Bitcoin isn't really a possibility is the lack of smart contracts and programmability and all this stuff where we can actually execute on things like programmed emissions, yield generating protocols, stuff like that, right? So you guys have kind of figured out a way how to kind of either use the built-in protocol benefits of runes to figure this out, right? So if you're an nUSD holder, you're natively part of that emission process, like you said, kind of like how R6 works. So is there like an indexing infrastructure behind all this? Yeah. How does it actually operate? How are you making sure? Because from my understanding, you're not kind of pigeonholed. You have to hold nUSD, right? It's not like a locking mechanism of any kind. This is you're still free to, like you're saying, operate and leverage the stable coin for any choice, and you're still part of that emission. So can you kind of break that down a little bit?
Yeah, I mean, we both know about bitmaps. So like Bitmap was just an idea that whoever was first to inscribe a block, you own that bitmap, and people built indexes around that. So the emissions for NUSD holders to receive BAMK is also on a per block basis. But instead of having one rights holder to the block, you're looking at each block and seeing where are the NUSDs held in what wallet and what ratio. And there's 31,250 BAMK that will be rewarded in a deferred manner, unlocking, I think it's 41,962 blocks from the block of record. And we first made a leaderboard for this. It's on the website, bamk.fi/leaderboard. But that leaderboard is now open source on GitHub. So someone else can copy the indexer or make their own indexer to this. In terms of the execution of the release of the tokens, that part is not part of the smart contract as of right now. But so far, the first 6.25%, the general free mint, where you didn't even need NUSD, that was taken care of by the Rune's protocol because it had a free mine feature. So that one was fine. Just like what was that thing, Rehu or something? The first coin was 99 point something % pre-mined. It took use of that kind of method. But the other 6.25% to NUSD holders, there has been no emissions yet because it's like on a deferred basis. So what that means is like we're taking a snapshot, the index is taking a snapshot of every single block. And as long as your NUSD was there for this block, you already got credited for your pro rata portion of this block's kind of BAMK reward, 31,250 BAMK, split between currently, I guess, 1.5 million NUSD holders. Maybe by the time the show comes out, it'll be much higher, like 2 or 3 or 4. We don't know. But then you're free to kind of like move your NUSD to someone else or sell it or redeem it. And if you log back in or to claim, similar to how BMPs were claimed for Bitmap, you will see that you will still get credited, just like RSIC. If you don't hold the RSIC miner, but you had it before, you were mining for those blocks that it was valid for. Does that make sense?
Yeah, I'm curious. Like, how do you actually execute that as a user? For example, let's say I hold 100 NUSD, I get some sort of allocation of BAMK. Do I go to a website to claim it, or is it sent to me automatically during the like emission schedule, or like how do I actually extract that asset?
Yeah, we haven't really determined that yet. I think our method is going to be give as many people their fairly earned NUSD as possible. Like, you know, this pizza drop that came out from BRC20, 5 byte ticker, they force you to have to claim. And there was no mechanism to help someone who's really qualified for a lot of pizzas. Kind of because the game was set up so that if you remember to claim and someone else didn't, then you got more pizza, right? So I don't think we're going to play games like that.
Okay.
What we'll do is likely a claim process, but then you'll be able to claim on behalf of another address. So if you would like to pay the miner fee for them, then they would receive their BAMK tokens as well, to try and get as many people to participate as possible. If there are some cases where some people have ginormous BAMK awards, like in the millions or something, or hundreds of thousands, and the gas fee is very minor, then us as a protocol might just step in and just make sure at least like the first, like the top 10% or something, all receive their BAMK rewards.
Okay, makes sense.
Yeah. But due to the gas fees for the smaller long tail, you're gonna have to claim it. But the thing is, you don't have to claim per block qualified. So if you can claim one time, and so that probably will make the cutoff much easier for most people involved.
Yeah, so you're just simply accruing a balance over time, right?
Yeah.
And I guess at some point this is going to be displayed through some dashboard of some kind potentially, or
yeah, you can already see the balance that you have already accrued for your NUSD on bamk.fi/leaderboard. And so the top 10 are all clearing 5 million BAMK already. And there's hundreds of people who are accruing BAMK. That's already there.
Yeah.
But then the dashboard that will come out that will be needed is like how much of that amount is available and already unlocked. So there's not a single point in time where all the BAMKs are unlocked. It's just every block has its equivalent future block. That's always the same distance apart, 41,962 blocks. So it's kind of like the first people that get in will be the first one that will release their BAMK as well.
I see.
And probably get like the largest portion of
just
right?
So you actually get the largest portion. You get to kind of, if you wanted to sell it, you get to sell it before further dilution. So yeah, it's very tilted towards the people at the beginning. But what's great about this scheme, I see people on Twitter calling it a Ponzi or something in a positive way, actually, like, oh, there's another Ponzi game I can play. The thing is, because the dollar itself is a Ponzi and there's an underlying yield from the interest rate, this game can last a long time because it's not just about the distribution of the tokens. If you think about it, right, like Tether doesn't even have tokens, doesn't even distribute that, but they have a sustained business model for the last 9 years because there's always this yield that they can capture from the bank. This is not just like a distribution of BAMK token and dump BAMK token and kind of cash out. I mean, you're free to do that if you want to, but there's an underlying sort of like network effect to the whole project, and a revenue model to the project as well.
Yeah, let's talk about the revenue model. I'm interested. I think in your last interview you were talking about how USDT has a revenue of around $4 billion per year, and I think they only have like 50 employees or something like that. So can you talk a little bit about their business model and how this might apply to nUSD?
Yeah, so this market is actually more profitable than their business model. It's just a matter of, can you scale this? So, Tether is now the number 16 buyer of treasuries worldwide. So bigger than most nation states, like behind China, Japan, probably Russia, etc. But number 16 is very high up, which means like as big as they are, there are still more treasuries they can buy. They can have more funds at the bank. But the reason why they need 50 people, which from the perspective of a Bank of America or Goldman Sachs, you think this is great, or Visa, you think, wow, how can you only do 50 people? Which, by the way, is not a true number. I think that's a mean kind of number. I think they have actually really account for hundreds of people, is what I heard from people at the company, if not thousands. But technology allows you to do more. And so if you look at like this type of synthetic dollar, because you're not interacting with the banking system, then you don't necessarily need like the operational accountant to check that an incoming wire has been received, or to deal with a wiring out of a redemption Monday to Friday through the banking system. Then you have a blockchain basically helping you do that on the mint and redemption. So in theory, this model is even more efficient. So that is kind of like the way technology has been about. I think a lot of people want to scale up crypto, but if you look at how crypto has advanced, running a DEX requires less people than running a centralized exchange. So I think running a synthetic dollar requires less people than running like.
Come back. A little lag. Jack, come back. Come back, Jack. Come back.
You gotta do the right thing. There you go.
There you are.
Did that freeze?
Yeah,
what did I end on?
I was like a 20-second freeze.
Okay.
Yeah, whatever you were saying 20 seconds ago.
I was saying like, okay, yeah. So by the way, I'm on Starlink internet.
That's cool.
Not because I'm in the middle of nowhere, but that's why it's like really fast.
So we were transitioning to a new satellite. That's what was happening.
Oh, wow.
Yeah. Okay. So basically, if you look at like a decentralized exchange, it is more easy to operate and requires less headcount than a centralized exchange. So I think the same thing will be the case for a synthetic dollar versus like a dollar that's backed by money in the bank that you have to deal with the banking system. But in terms of the scale of the size, then because you don't have banks or treasuries to buy, but you have to have positions on derivatives within the crypto ecosystem, you essentially need crypto to grow larger for dollars to grow larger inside this like synthetic dollar system. And so like if Bitcoin, ETH, and the whole crypto ecosystem doesn't grow, then I think, this is coming from Guy at Athena, they've done the math in terms of like what's a healthy position to be of the derivatives market. You probably cap out at 20-30% of the derivatives market, which is currently, from an open interest perspective, about $40 to $50 billion, which means like kind of like this model caps out currently at about 10 billion issuance. Yeah, whereas Tether is kind of uncapped. It can go to 1 trillion and be fine. So that's kind of where this is at.
So basically, if you're at Tether, you have to rely on accountants when somebody wants to exit their position from Tether to USD. You have to wait on somebody to actually push some buttons in order to release that USD because they hold a bank account. But what you're saying is the accountant is the blockchain, right? Because you're exiting from, let's say, nUSD to like a stable coin.
Hey, sorry, you froze again. Can you go back to with Tether? You rely on accountants to start from there.
Yeah. From Tether, okay. So let me see if I get this correct. So with Tether, you sort of rely on accountants because when you exit your position, you are relying on people to actually send you USD from to your bank account, right? But with nUSD, you're not relying on accountants; you're relying on a blockchain, right? That is backed by another stable coin on a different chain. Would that be correct?
Yeah, that's right. And even if the plan for phase 2 is to no longer be backed by the USDe, it'll be backed by positions on-chain derivatives. So there's on-chain perpetuals coming,
right?
Probably to Bitcoin, and so those are all programmable by code as well.
Okay. All right, so now let's go into I guess the ground floor of this. Like you're a degen, right? And you're holding a bunch of these meme coins, and you want to say, hey, you know what? I'm kind of done with this. I don't want to necessarily go to essentially to Bitcoin and then to an exchange. I want to have like some stability within the chain itself. So how do you actually go about having your assets be converted to nUSD? Like what's the process for that?
Well, currently your choices are you can log into Magic Eden and then just buy essentially as if these are NFTs. You can buy the little order sizes of nUSD in like 500, 1,000 tranches. So you would buy them as if they are any other Rune. So there's actually 2 Runes. Only BAMK right now is listed in the top, I guess, 5. That's the protocol token. But if you look at number 100 on Magic Eden, you'll see nUSD as well. So you're essentially just buying this Rune that just doesn't go up or down. It's just supposed to stay neutral to the dollar.
Okay. Yeah, that's.
But later on, you'll see swaps or like this Rune AMM swap. And the other thing is like the nUSD is on multi protocols as well. So already it's on BRC20, the 5-byte ticker, and it's also on Rune. Only the BAMK is on Rune itself. So if you're on the BRC20 protocol, unless you have some pizza, you can expect that there's going to be a BRC20 pair between pizza and nUSD, potentially also ORDI and SAT against nUSD. So this becomes like the base pair inside the BRC20 protocol, which I think is an interesting distinction because these order book like platforms, they trade against BTC. I don't think nUSD is going to replace that. But on the swaps, it's BRC20 versus BRC20, and it's Rune. And those ones, unless someone's going to step up and wrap BTC in massive size, then you could expect, unless that happens, you could expect something like nUSD to be the underlying base pair on chain.
Yeah, I wanted to talk to you about this when last we spoke because are we ever going to get into a position in terms of technology to allow for liquidity pairs to exist on chain on Bitcoin so that you don't have to necessarily buy assets in order to exit a position, in the sense like right now, like you were saying, I sell my meme, I go back into Bitcoin, then I don't want the exposure to Bitcoin, so I need to buy nUSD. So is there a way where, instead of buying like this like NFT, right, you're buying actual like fungible tokens that have liquidity pools and all that stuff? Is that even possible on Bitcoin?
Yeah, this is what I've told is very possible. Unisat's working on it for BRC20s. Magic Eden, if you look at the tab on their Runes market, there's like a swap. It says coming soon. So they're working on it for Runes. Dot Swap is working on Rune as well. And so that means you directly go from any asset to nUSD.
Gotcha.
Now you could potentially have a pool with LPs going from, let's say, BAMK straight to DOG. But we don't know if that's going to be a popular pair, or dog with pups. I think most likely the most popular pair will be against a synthetic dollar or stable dollar. And by nature of NUSD being out there, I think this is where like the bigger the TBL grows for NUSD before these swaps hit the market, the more likely the NUSD will become the default base pair for these pairs.
That makes sense. So essentially what was missing is a stable coin on Bitcoin to create that liquidity pair.
For what? Missing for what exactly?
Just the fact that right now, in order to get into a fungible token, let's say I only had $100 worth of Bitcoin, but to get to this fungible token, it looks like the cheapest price is $1,000, right? It's like buying an NFT, right? And so, but I want to buy $100 worth of that token, that fungible token, not $1,000.
Yeah.
So you need liquidity in order to do that. Right. So,
and Saturn BTC already allows for partial fill. So if the order listed was 1,000, you can buy 100.
Oh, okay.
You don't have to buy the whole order. That's Saturn BTC. I think that's an improvement as well. Again, I don't know the specifics of these products in terms of their credibility, their decentralization, etc. But it's great to see this ecosystem build around that. You know, when we were excited about Bitmap a year ago, that's about builders building around like this kind of metaverse, which you guys contribute to as well. But this one is a much broader implications because obviously, like, we're trying to replicate everything, not just on Ethereum, but everything CeFi, but on chain.
Yeah,
on Bitcoin.
Yeah, that's interesting. That's quite the statement.
Yeah, it is. It's huge.
Yeah, we're all about like trying to find these like grand
narratives,
like mission statements. These, I mean, the metaverse is obviously a big one. Yeah, replicating all of CeFi on top of Bitcoin is massive, like you're saying. So, I mean, what do you think as far as like strategy goes? Because I heard you mention the word meme along with the token BAMK. Like when it comes to issuing like a financial protocol, especially on Bitcoin, is what runs through your head as far as like, I guess from like a marketing and PR perspective, is this because this is like noted as like a serious sector of crypto, right? Like you don't want to fuck around with this kind of stuff because a lot of money is at stake.
Yeah.
Right. But then you're going to integrate the culture of memes and stuff like that. Is this like actually like a perfect marriage? Is there any kind of conflict in any sense? Or is this just kind of like the way to leverage like what the Bitcoin ecosystem is right now and kind of like bring them into a much more serious matter, right? Kind of like, you know, let's upgrade as a culture. Not think so much about memes, but let's figure out how we can leverage the power of meme culture to produce something that we could all use, right?
Yeah, so my personal view, which happens to have been married to this project in I think a very fitting way, is my personal view is that as AI develops and as things go on chain, the labor cost and the capital cost to create anything drops towards near zero. So you could make very serious projects as simple to create as like memes, or that's how it's going to trend. And so rather than have this entire culture switch out of memes into something very serious, which is kind of like the VC funded model versus the meme model, that's the conflict of today's in crypto. I think you can increasingly do more serious projects while being very serious, but having like meme-like tokenomics. So I think if you look at this, right, because you have gotten off of the banking system, then you don't have to start with 100 accountants and whatever else. You don't have to start with major venture capital. That cost reduction is what allows something like a 6.25% free mint for the Ordinals ecosystem on Bitcoin. If you didn't have that, you would not be able to start like this. So that's the marriage that I'm looking at. And then, but of course, if you start this way, there's going to be questions like, okay, well, how serious are you about the project? And how to communicate that to the world? Because traditionally, the way you got this kind of validation, the stamp of approval was, oh, you raised from these VCs upfront. Yeah. But the flip side of that is the project comes out at a very, very expensive valuation. For example, with Athena, it came out at about 10 billion fully diluted valuation after several months or a year of work behind the scenes. And in the case of like Tether and USDC, you cannot invest in those projects as a degen kind of retail person. So that's right. the way we're doing it is the other way around. Is like, okay, let's start with the culture, and I'm happy to announce that as of the time of this release, UTXO Fund, which is like the Bitcoin ecosystem fund from the same people behind Bitcoin Magazine, they've committed to a 1 million TVL in NUSD.
Oh yeah,
dude, that's huge.
That's crazy. So what does that actually mean? Does this mean like there's like it'd be a cascade of interest from other parties that probably want to kind of like contribute in this fashion? You think? I doubt this is like the only time you guys are gonna.
Yeah, the great part about this is like those funds are adjusting to this culture, and so not only do we secure this 1 million commitment, we secured it with the current vesting schedule of the allocated BAMK rewards for NUSD. So their 1 million is going to be there looking to collect BAMK, and it's variable, right? There's no guarantee of how much BAMK they're going to earn. If the TVL goes to 10 million, they're going to be only 10% of the TVL.
That's right.
Will there be other ways to do this for onboarding institutions? We haven't thought about that, but what's great about this is like none of the tokenomics have been changed for the public as a result of bringing on institutions. So I think that is like really interesting. I mean, if you look at what Izzy Azalea is doing with Mother, just to put it out there on Solana, she started as a meme coin. Everyone thought this would be a pump and dump, and then now I don't know if she's joking or not, but she tweeted that she has some mobile cellular company that she was going to launch anyways, and now it's going to accept Mother. So you add utility and seriousness on top of like a meme. So the future is like everything's a meme, and some things just stay as a meme, and some other things add seriousness on top. I think that's the new trend.
Yeah, it's sort of like Elon Musk almost accepting Doge for Teslas, right? That almost happened, right?
Yeah.
Yeah. So yeah, that makes a lot of sense. So yeah, I think it's interesting that you have like these commitments happening, and they're committing to like this whole style where BAMK is sort of like at first a meme, but all of a sudden it's like a token that has like a lot of backing as a result.
Yeah. Like you're saying, institutional participation, right?
Yeah.
Which is a big deal, right? Because it definitely, in the way you're going about it, like it is kind of different than what I guess the space is used to. It's like, they're kind of working on the back end, like leading up to the launch of a protocol. So it's like they're getting into the ground floor, equal participation as the rest of us, right? So it definitely aligns with this ethos of Bitcoin, right? This whole fair and transparency and all that stuff. So, what do you think as far as so a lot of this pegs and is dependent on Athena, which, like we said, has all that year of development and probably a lot of research. And so at face value, I mean, this thing has been out for a few months. It seems like it's off to a good start, but there's potential risks involved. I'm sure. Is there anything you guys are thinking of as far as to deleverage yourself in any way from Athena risks, whatever they may be?
Yeah.
Right. Is there anything you could do outside of that? It's like, we're right now at this early stage. Athena has, synthetic dollars, pretty dependent, right? But in the event there's some sort of market turmoil for whatever reason, we're also, hedged in a way, in a sense. Have you thought about that?
Yeah, I think we like the risk profile of the Athena model. So even in stage 2, where BAMK will be removed from the Athena backing, it will be backed by a similar trade that Athena does, although we would like to do it only on-chain dexes instead of centralized exchanges. So we think that the public and whoever's got holding NUSC should be made aware of the actual risks of the Athena model, rather than say that there's a way to mitigate the risk in the underlying. So like if you really want dollar-backed stablecoins, you should not be touching NUSD. Bank-backed stablecoins. But if you are happy with this type of, we call it, like Athena also calls it, internet bond, then this is the product for you. So we'll probably work to isolate the Athena specific kind of protocol risk, but the underlying mechanism of being delta neutral, shorting on perpetuals, I think that's going to be the way this will be run. And then I think in terms of like what position size to look at, I think as you approach, if everything goes well, you approach 5-10% of Athena itself in terms of the underlying, then that's probably the right time to move away. But Athena right now is already up to 3.5 billion of TVL themselves. So that you're looking at something like 170 million, 300 million of TVL for nUSD before you would start executing on something like that.
Yeah, I guess.
No, I was just going to ask about, I guess, building out the ecosystem from here. Because, yeah, assuming you're right and everything is peachy, which seems like it is, I could foresee like a lot of liquidity entering and like new confidence, I guess, kind of emerging around all this. And like based on what we witnessed last cycle, that really was like the ground floor, like with MakerDAO and DAI.
Yeah, 100%.
And like we covered the DeFi space, and like a lot of DeFi activity kind of like followed, right? And it kind of blossomed from there. So like, how is this gonna kind of replicate itself on top of Bitcoin? You mentioned like Saturn and other platforms, I guess, that are figuring out swapping and stuff, but how are they actually technically achieving this? Is this something that can be replicable for all facets of DeFi? Or is all of DeFi in your mind, it has to traverse to some sort of layer 2, whether there's internet protocol, whether it's it's got to be EVM based? Like, what is your actual vision of that feature?
Yeah, I think it's great first step to be on Bitcoin layer 1 on the different protocols on layer 1. I think a lot of people skip that and go directly to layer 2. I think that's not the approach. I think we want to be have some asset on the layer 1 to start. And then you are diversified in, I think, 3 ways, right? Well, maybe 4. Number 1, you're prepared to launch on other L1 protocols on Bitcoin. So if Modo Swap is the new standard with CBRCs, then you will launch nUSC on that. Similar to how USDT is on Tron, on Ethereum, or Arbitrum, on all these different chains. Number 2 is you do want to work with the different layer 2s like BitLayer, Merlin, etc., to kind of bridge the nUSD over. Since they're already able to bridge assets like ORDI and Sats and bitmaps, that should be no problem. And then you want to look at how does Bitcoin scale on layer 1? So there's projects like OPCat, and I'm not a developer, but my sources tell me like once that is kicked in, you could have full on-chain order books where multiple interfaces can share the same orders on the Bitcoin that exists on Bitcoin. So then you don't have different marketplaces holding on to the different PSBTs themselves and having a moat around that. That's kind of why right now, if you look at some of this BAMK token trading or nUSD trading, it's like kind of 95% on Magic Eden or something like this. And the other marketplaces are looking at crumbs. And it's vice versa for BRC20s. It's like 95% on Unisat. If you have OPCat enabled, then all the marketplace, all the interface, even smaller guys can share the same order books. That's super exciting. And then like if that doesn't materialize, let's say like layer 1 is too clunky, layer 1 scaling with UpCat doesn't happen, layer 2 doesn't really happen, then you look at like, our team comes from that kind of Bitcoin ordinals, Doginals kind of ecosystem. You could very certainly bring nUSD to the adjacent UTXO chains or even to something like Solana and kind of run parallel nUSD around different chains as well.
So once you've kicked this off, like TVL is starting to go up, and like, what's the mode of operation for you and your team? Like, is it just a matter of marketing and telling everybody that we have a stable coin on Bitcoin? Like, how do you grow this ecosystem? Like, do you need to start talking to like marketplaces to like support like token pairs, and like how like what's the action for you at this point?
Well, it's interesting. How did you guys hear about us? Because we know each other, but I didn't reach out to you. No, you found it yourself, right?
Yeah, as a matter of fact, when I think it was Iman that reached out to BAMK on Twitter, right? And we're like, hey, you guys are building something interesting. You want to come on and talk about it? Yeah. And then all of a sudden, I get a request for podcast from Jack. I was like, dude, is it a coincidence, man? Or because I didn't know that you were part of the team. Yeah. And then that's how we got into it. But how did you find it, Iman?
Twitter. Like Twitter, we find everything else. I don't exactly know what the trigger was. It probably was the memes that we're starting to see, but all of Runes are memes, right? So it's like, and we've made it our, like, I don't know, our activity here on the channel, not to like get sucked into that
Yeah.
rabbit hole of like memery, because it's almost impossible for us to identify which of these is actually worth anything.
Yeah, it's all random.
Yeah, so we don't want our audience to kind of like get lost in those weeds either. I mean, you can, it's free. It's a free world, right?
Yeah.
You can do whatever you want. It's all fun and games. But yeah, we did a little bit of digging and then looked you up on Twitter, saw that there was like some actual financial implications behind this, and then just the connections to Athena. So it was the first real Runes project that was just inherently interesting to me.
Yeah.
Did you find out about Athena through BAMK, or did you already know about Athena's?
Didn't know nothing.
Yeah.
I mean, we've been kind of in our own world with our own development with DMT and everything, so we're missing all of DeFi. This tends to happen to us.
Yeah.
We get so sucked into metaverse development. It's happened last cycle too.
That's right.
We knew DeFi was a big deal, and we caught like the early stages of it before like the real tokenization of it kind of occurred. While all that was happening, like the metaverse was first kind of like being birthed on Ethereum, right? So we missed a lot of that. So here we are again on Bitcoin, focused on the metaverse, and DeFi, it seems like, is being birthed.
That's right.
And we're probably going to miss it because we're so focused on this.
No. You found BAMK very early. And Will, to answer your question, I was just alluding to the fact that even though we have a relationship, we know each other, and probably in other respects, I probably know the centralized exchanges or VCs to fund this project. This is really a social experiment of how big network effects are within Bitcoin, which is like if you allow a token to be floating out there, I think this is really the next iteration of the token distribution model. Like if you think about back in 2017, it was like ICOs, right? Have a sale, whether it's EOS or Tron, and then get a whole bunch of money, but that has a bunch of legal implications. So then the space moved on to this kind of private VC rounds with crypto venture firms, and then do like a seed round, B round, whatever, and then go on exchanges. But in both of those models, you have security risks, and then you have to go do something with this money that you raise to try hire a team and then have marketing and then press and then try and grow the business. But if you can have token holders right off the bat, where they didn't actually contribute any funds to the project because they were paying Bitcoin miners to inscribe BAMK, they were not paying our team, then you basically have an audience that is, like you said, creating the memes that is reverberating around the whole ecosystem. And I just think maybe it doesn't work for every project, but for something so fundamental like a synthetic dollar inside of Bitcoin, and with Bitcoin being as large as it is, and the ordinals as large as it is, look at how Dog achieved its market cap. Look how Pizza achieved its market cap. Ordi. These are all fundamentally bootstrapped from the chain or airdrops itself. So with that, I think as TVL grows, that's a metric that's giving people more confidence. Announcements like UTXO fund putting in 1 million in nUSD, and as token holders get more distributed, I think I would expect us to be able to talk to bigger and bigger firms that are going to reach out to us. So our mode of operations as a team is to actually move fast in terms of the culture and the things that have nothing to do with the actual underlying mechanisms, but move very slow and very, very careful with the actual backing and the collateral and all of that. Because I think if you're first, you don't have to take crazy amounts of twists and turns. What you need to portray to the market is like stability and sort of a solidness in the way you operate. And that's kind of what attracted us to bring on UTXO Fund as well. Because I think a lot of people don't know, like you said, why this is not just a meme. Maybe it is just a meme. So that it just goes step by step. So instead of like starting very, very serious, I guess we start from the bottom and then we get more serious as we go. And I think just riding along Bitcoin's network effects and all the other builders, that's the other thing, right? It's like, we're not the ones building Saturn BTC. We're not the ones building Magic Eden. We're not the ones building OKX Web3 wallet. But all of these things that are being built are essentially partners, whether they want to or not. It's not partnerships with a DocuSign or a press release. They're partnerships because the NUSC token is interacting with their products within Bitcoin itself. So that kind of network effect and BD marketing, I would argue, is a stronger effect than anything you could do with the best marketers in the off-chain Web 2 world.
Yeah. Yeah, and this is why we do fundamental analysis, and why we like it is because this stuff is repeatable, right? If you're just looking at meme coins, you're basically gambling. And so when we found this meme coin called BAMK, and then we looked into it, it's like there's some substance here. That's like, well, we got to talk to these guys, because when you're talking about a stable coin on Bitcoin, it's like the single most important primitive that you could create on Bitcoin.
Yeah, it definitely reminds me a lot of Track. Whenever we first found it for BRC20s, we were struggling with the same things. Like, wow, this whole fungible shit coins on Bitcoin is really badass, but man, these all look stupid as hell.
Yeah,
they were all memes. And then Track emerged with Benny had like an actual thesis of like a real utility, and and we had firsthand experience with this problem, like indexing reliance. And it's like when something goes wrong, everything goes wrong.
Yeah.
It's like, well, if we really do distribute like this task a bit, right? So Track had the right thesis. That turned out to be very on the spot, right? So you guys are painting another problematic issue within like the Bitcoin ecosystem, right? It's like, stability is important if we're going to create any kind of like semblance of a digital economy. This traverses into all facets of Web3, even the metaverse, right? If we're going to build a metaverse on Bitcoin, part of that sustainability for those digital economics is figuring out how are we actually going to achieve that, bring DeFi into the virtual space, right? And native to Bitcoin as well, just like Bitmap is.
Yeah.
So these are very important things that need to be discussed. And like you're saying, it doesn't need to be so serious in the beginning, right? Let's just get people onboarded, I guess, with like a vibe, as they like to say.
Yeah.
And then it could slowly trickle in the seriousness of like these dilemmas without scaring people away, right? Because right now at this stage, people are intimidated by like a serious thing, right? Because of the execution risks and all that. So but I think you're off to a really good start for sure. It got us interested in our audience engaged, and this is what we're looking for, right? Something substantial.
Yeah,
to talk
and
about.
And I think this is a great development. I think one more thing I want to harp on is like the size of the market and the sustainability of this underlying yield. So like at the end of the day, Tether and USDC, they can only get as much interest as the bank is willing to give them. So when they first launched, interest rates in America was actually 0%. So there was no business model. Now it's about 5%. And they can choose to pass that on to users or not. But at the end of the day, you're only getting 5% on the holdings in the bank. And but here, the yield historically is much higher than the yield that the Treasury is offering or the Federal Reserve is offering, because it comes from the economy that's the crypto economy. And if the crypto economy historically has grown faster than the fiat economy, then the inherent interest rates there is higher. And that's captured by this like perpetual swap trade. So, as you look forward to the market, the rates should hold higher. Even if they drop a lot from the current 20-30%, and they drop to like, only 3% over treasuries or 5% over treasuries, this is still a very significant difference, right? That's like almost double the current rate. And then the other effect that's pulling in is that if you notice, Bitcoin used to be very reliant on things like WBTC to be able to be moved over to Ethereum. And Bitcoin was very reliant on the centralized exchanges. So you needed centralized exchanges to do it. You needed custodians to hold Bitcoin, like BitGo. You needed like central banks to hold it on the balance sheet, like corporate balance sheets for Bitcoin. But now the effect are reversing. Instead of putting Bitcoin into WBTC on Ethereum, the developers actually bring Ethereum Solidity and EVM tech over to Bitcoin and building L2s for Bitcoin. So they're Bitcoin L2s instead of ETH L2s with wrapped Bitcoin. So if that effect is happening, then more and more of the Bitcoin stay on chain or used on chain. And so if you go back 10 years ago, the idea that someone held Bitcoin and wanted to buy, let's say, like something from Amazon, they had to sell their Bitcoins, pull it out into the banking system, and then now go back to the regular credit card and buy something on Amazon. Well, as the pot of money is growing inside the Bitcoin blockchain, now is the surrounding ecosystem like BlackRock saying, you know what, it's okay. We will come to Bitcoin so that our users can just buy the ETF, but we'll hold the Bitcoin on their behalf. And so that means that eventually the dollar has to come to Bitcoin instead of Bitcoin gets swapped out to dollars on central exchanges or banks. So NUSC essentially is currently the only dollar that's arrived onto the Bitcoin blockchain with those kind of emergent network effects. And eventually you'll see probably crypto credit cards accept things like nUSD. And that way the user just literally stays with their Unisat wallet or onchain, Phantom Bitcoin wallet. You notice that Phantom has also gone from just a Solana EVM or Ethereum wallet to now also building a wallet for Bitcoin ordinals. So this is the kind of black hole that's coming in. And the effect is just continuously growing.
Yeah, so it's a huge migration effect. I mean, our background was like building on Ethereum smart contracts, and then we saw ordinals. We're like, wait a minute, there's a huge opportunity here, and we sort of transition, and all we're doing is focusing on Bitcoin, right? And a lot of projects are going to do the exact same thing, and I think you're right. I mean, we used to see Bitcoin on Ethereum with wrapped BTC, but now we're starting to see smart contracts on Bitcoin and going from ETH to Bitcoin and like in this whole mass migration. And so I think that being interesting, and I think it's because of Bitcoin and it's like its entire hold that's growing on the planet right now. ETFs being approved, countries, we got maybe the future President Trump talking about Bitcoin and supporting it.
Yep.
Like there's like this huge network effect sort of just keeps growing with Bitcoin.
Yeah. All those things you predicted those years ago are actually it's happening.
Yeah.
You're wondering. Is
I was telling Iman, there's no way the United States is just going to lose their position by fighting back on Bitcoin. I think their only way to maintain their position is to support Bitcoin. That was the only outcome. Right. But
I was a little more like doom and gloom on that. It's the United States, like at any cost, will preserve its foothold, its grasp on like the geopolitical space. So anything that can threaten that, I felt like they would have been like, well, and they have been up until recently. And this positive turnaround might just be smoke and mirrors.
It could be
just to get in the office and stuff, and nothing actually is executed.
100%. Yeah.
Politics, right? That's what happens time after time after time. And nonetheless, like you're saying, Bitcoin still, it's center stage, part of the conversation of like what matters for like civilization moving forward.
Yeah.
Right. So it's a big deal. We're at an inflection point, and then it's like perfect timing. All these new protocol developments happening on top of it. Just kind of like, it makes it a little bit too tempting not to be a part of that, right?
I would think so.
That's what happened to us. So it's I guess outside of that, so we're at pretty much at the top of the hour. So if you have any other, you already announced a pretty big thing. So I don't know if you have another one you've been cooking up, because that's pretty insane. Like if people don't understand, I like to extrapolate. If you're just announcing that you've got $1 million on board from a pretty notable institutional player, I'm foreseeing like again a cascade effect of that down the line. And again, this narrative, this market vertical just seems too damn attractive not to be a part of. But if you have anything else as far as like announcements, now's your time to let us know.
I just want maybe as an inspirational message to other builders, it's like, even though you may not be connected to people that do podcasts or venture investors, etc., it's a case where if you grow your project on Bitcoin, like you'll be connected to everyone naturally. So I think something like Naval has said this before, like networking is overrated, but just do a product and then your network will find itself. So I really appreciate that you guys found us, and that's a great boost of confidence for our team. They're really excited about this episode going out. So thanks for having me on.
Yeah, for sure, man. That's the most important thing for us is like anyone who's building anything where we see a hole and we see a project filling that hole. That's a project that we want to talk to, just because they're like us. Like we see problems, we try to build solutions as best we can, and then we try to execute as best you can. And you guys executed properly, we found it, right? And so that's like pretty good, right?
It's not just finding it; it's not like what's the word? Like eroded with like smoke and mirrors around it, which is a big thing for us, a really big thing for us. Because, I don't know if many people understand what it is when I say those words, but we deeply understand it because we've been around too long to where we could like instantly spot when a project has like that authenticity to it or not. Like if it's actually like an organic thing or like an orchestrated thing, like almost architected by some like not the invisible hand, some like actual like very visible hand. You know. So you guys didn't have none of that. So you know, and we didn't even know who was behind it. Nothing, right? So that's what got us interested, right? So.
Yeah, Jack. So yeah, we're at the end here. I appreciate you for joining us. Next time you have like another update, another secret project you got going on, definitely launch another token so that we can find it, so that we can have you back on.
Yeah, for sure.
Yeah, thank you.
All right, sounds good.
Yeah, thank you so much for your time, man.
Thanks a lot.
Yeah,
talk to you soon.
All right, guys. And for the rest of you, all the links will be in the description. We're definitely going to be looking deeper into BAMK and nUSD. It's something that, like we said, is a huge primitive. But yeah, if there's any questions, leave us a comment down below. And I appreciate you guys for watching, and we'll catch you in the next episode.
Peace.